Hi there. Thank you for attending the seminar. PearTree has sent out a questionnaire to users of our seminar programs to say what type of seminars you'd like, and enough people want to do a seminar on, we are calling international charity and Canadian non-registered charity. And so here we are. And this is an amazing topic of great change for the charitable sector in Canada, and for a fact of what charity can do in Canada. So I'm very, very excited to do this. So let's, what does this mean, international charity and Canadian non-registered charity? So if you wanted to donate to a hospital in Rome, that's a charity in Rome, but it's not a Canadian charity, right? If you wanted to donate to an institution in Canada, that's in Canada doing charitable work, medical work, that is not registered as a Canadian charity. So that's a Canadian non-registered charity, still doing charity, but non-registered. Before this legislation, what were the effects of doing such? Well, obviously, if you donated to the Rome hospital, good luck to you. There's no Canadian receipt. You couldn't use it on your tax return, generally. Okay. A foundation, that's what we're talking about, an individual donating, couldn't do it. The foundation, could they donate to that Rome hospital? Maybe 30 years ago, they could have, but in the last 2 decades, there was legislation that says you cannot donate to a charity that's not Canadian registered. If you do, we can take away your license. So now we can't do it in their sort of normal ways. There are other ways. So again, the same thing for that Canadian institution that's not a registered charity, when the foundation couldn't make a payment to it. It's not a registered charity, and the individual could make a payment to it but not get a receipt usable against their tax return. Now there are, for international gifts, there are some exceptions in the Income Tax Act, which says, it's okay. Like United Nations agencies, if you donate there, it's good. You can use it as a Canadian donation. Institutions of the Canadian government, if you see when some catastrophe in the world, the Canadian government says they're giving to this charity in that land to accomplish things. If you do that, you also get it's as if it's a Canadian gift. Another very, very important one are universities. There's hundreds and hundreds of accredited universities in Canada that are not Canadian that say, well, if you donate to them, it's as if you're donating to Canadian, charity, and that's very valuable. So, for example, if you were to donate to Harvard University, that's fine. It's on the list. There's most of them are in the United States. So there are other universities all over the world. It's on the list, and that's considered good. If there's an entity called the Canadian Friends of Harvard, you're not giving to Harvard, but you're giving Canadian Friends because it's a Canadian Friends registered charity. That will qualify there. But so giving to Canadian Friends or to Harvard directly gets you a great receipt. Okay. Little blurb. So giving to, let's say that hospital, not in Rome, but let's say in New York City, again, not Canadian registered charity, therefore not good. The individual can't get the receipt and everything like that. But there is one thing people forget, is that we have a treaty with the United States, which actually has a part of the treaty talking about donations. And it basically says, if you have source income from a country, you can make donations to that country. So if a Canadian on their, let's say, personal tax return, on their tax return have dividend income from IBM, whatever, US source income, okay, of $2,000, which is on their tax return, that person can then donate into the United States in a normal charity that would look like a charity in Canada. and you're allowed 75% of income. So you can actually have $1,500 of American donations on your Canadian tax return, no issue. Okay. Of course, foundations don't have that ability. They don't have taxable income and everything like that. So it's not as if they can all of a sudden say, "Oh, I want to donate to that American hospital." So that's a little bit of a background. Foundations dealing with these issues of donating to international charities or Canadian non-charities have evolved a certain methodology over the decades, because one of the things that they can do, again, they are entitled to donate to Canadian registered charities, but they can also do their own charity. Okay. And so what has evolved with the government's full participation and rules and everything is the little 3 words, do your own charity, has evolved into a methodology where you do the charity in the Rome hospital. Okay. How do you do it? You enter into an arrangement, let's say a contract, with the hospital in Rome saying, I want to do charity in Rome, medical charity. Can you act as our agent, right? An agent acts in your place to carrying it out on our behalf because you're good at that. Or sometimes there's a contract not of agency, but of services. We're contracting you to perform these services in the hospital in Rome. And that was a methodology that was arrived at in which, foundations were actually making transfers into foreign countries, or it could be a Canadian non-registered charity, same thing. See, think of a charity, of an institution in Canada, not a charity that you want to do work with. It's charitable, and you'd enter into this agency agreement or this contract of services agreement. And so there's rules and regulations surrounding that, and the CRA rules were there to be followed. You had to follow them because you didn't have much legislative backup to say do your own charity. Right? How is that going to work? There's not a lot of detail there in those 3 words about how to do this. So they said, "Oh, we'll accept it under these conditions." And there were some wordings, 3 words that came through was direction and control. Very difficult words. It seems they're not difficult in themselves, but it basically CRA contention was you have to direct and control the charity. Okay, and therefore, your communication, your contract, your methodologies were done on that basis that, it showed that you directed and controlled. If you're going into that Rome hospital, you were, directing and controlling the medical procedures. You were part of decisions, and you'd have to show this in your documentation of how you're part of decisions and how you operate and things like that. Sort of a little ridiculous if you really think about it. You're directing, controlling medical work in Rome, but that's the system. And lawyers would get in the habit of how to write up your programs so that it looks as if you're directing and controlling. And I'm using the word looking because no one directed and controlled, or very few. Sometimes you had your own employees sent over somewhere and they actually did the work on the ground. But if you were, you're not donating because it's your own charity. But if you were giving funds over to a Rome hospital and you were directing and controlling what was going on, not really, right? You're sitting there and telling the doctor what to do. Not really. But your documentation was said that you were involved in these decisions and everything like that. The other part was, which was quite difficult, was they said, if you're doing the charity, you should have the books and records here in Montreal and Toronto and Vancouver, right? It's your charity. So you would obtain all the backup to your expenses. If you're sending money out there, you'd say, I want every invoice for every penny of what I'm spending, and have it so that I have these invoices on record here. So it's part of my books and records of doing it. So this is very difficult, but we did it. It was done. Direction and control. so what a change happened is that, and the change came out of the Senate actually, is to push on this and say, isn't it a little ridiculous that we're using direction and control as a means of dealing with organizations? It's sort of a little fabricated, but also from a certain point of view, if you were, and this was the example, dealing with an Indigenous institution in Canada that's not a charity, and you're working with them to do something medical, social, poverty, charitable, etc., and you are directing and controlling them, isn't that a little not, correct in 2023? So that got a little bit of a play, and well, it worked, because a year ago, we've had this legislation in Canada since July of 2022. So we actually have new legislation, and it's very beneficial legislation of how to do these kind of gifts. And we've got to go and use it, type of thing. Use it for two reasons. One, it's better than the previous fabrications that we're doing. We're not fabricating anymore. We're not making up stories of how we're going to direct and control, because we don't have to. Okay. And two, it's a much less risky affair of doing it. But we'll talk about that. So let's look at this new legislation that we have. And so as I said before, and again, we're looking here at foundations now. We're looking at charities doing this, not individuals. Okay. And before we said, oh, you could only do two things. You can do your own charity, or you can give to Canadian registered charities. And now they've added something here. B, to a grantee organization. What's that? If in furtherance of a charitable purpose as a charity, we're going to come back to these words. These words, some of these words are very important. What does that mean, charitable purpose of the charity? Exclusively applied in furtherance of a charitable purpose, and the charity maintains documentation to demonstrate this, okay, that the monies were used exclusively for the charitable activity. So these are very key words here. And we're going to look at some of these words, type of thing here. What is a grantee organization? That's just an organization that's not a Canadian charity, okay? It could be anything, right? So, okay, that's a good thing. So we have this new way of making a gift, okay, making a gift to a grantee organization. And as long as we have a charitable purpose, it's exclusively used for furthering that charitable purpose. You have documentation to show this. Okay, well, what does that mean? And 100% has got to be, for that purpose, for charity. Okay, so let's they did throw in something, an anti-avoidance provision, which is a little murky. So we're going to look at that for a second and come back to it. But the anti-avoidance, all of a sudden, in another section of the Income Tax Act, I have it. It just says, in the case of a registered charity, you have, if you're doing this and someone gives you money for the express purpose of giving, making a grant, then that's offside. That's pretty wide and difficult to understand. We're going to look at it a little more, but we still really don't understand it. They're basically saying what they said in words on in the legislation is, fundraising shouldn't be allowed. In other words, you shouldn't just be a place where you're fundraising for the foreign organization. You're just taking in money and sending it, type of thing. That's what the language generally says. But the legislation is that you shouldn't accept a gift that's expressly or implicitly conditional on the charity granting it over to a specific recipient. We can go to the next slide, by the way. Other than a Canadian charity. So what does that mean? I don't really know. It seems very onerous. Okay. one of the things we're going to look at this, that the CRA does have a guidance on these rules, which guides us quite a bit, not completely, is they say, look, have language on your left side that simply states that charity decides on the use of the funds, not the donor. So that you're sort of saying someone's giving you money, but it's not for express purpose to do something. It's a general purpose. You, the charity, are determining what the express purpose is of the funds. And you should have on your website that says, you're giving money, and I'm just going to use this as you're using money for Ukrainian relief, but it's not saying what it's used for particularly. The charity in Canada will determine where it's going and how it's going and what it's doing, type of thing. So that's a little bit of a help by them saying this type of thing. We'll come back to this a little bit. And let's move on to the guidance that CRA. Okay, let's do this. Okay, so is this a good thing? So this is a very good thing. Okay, so this granting differs from your own activities, direction, and control. Okay, so it's not that you're doing the charity and you're directing and controlling. So that's out. Okay, so that's a very big thing. So one is the charity can collaborate, not be in charge. So what does that mean? Okay, before you had to do your charity. Okay, it wasn't that, oh, you're putting up a building in a hospital in Rome, type of thing, and of course, and you're not, and you're one donor amongst many, type of thing. That's not your program. Okay, so you have to identify a program that's yours, that's 100% yours, and say that's what I'm doing because it's your charity. You're not doing charity. Your program's not with others. Okay, so you have this difficulty really of trying to determine what you're doing and documenting what you're doing. Now you don't have to do that. It's not your program. It's the charity's program. They're deciding what to do. They're deciding how to run the program. When I say charity, that Rome hospital, they're deciding what to do, how it's done, to what extent it's done. There could be many donors into that program. That's okay. It's not your program. You don't have to put your name on it, anything like that. It's the Rome Hospital's initiative. It's not you. You don't have to be, I'm determining what I'm doing. You don't have to give instructions to the Rome Hospital on direction and control. Okay. We did an agency agreement or a contract of services with a museum and developing a museum. And yeah, I was on the committee that decided what went up, type of thing. What was the, what were you showing in the museum, type of thing. Okay. Don't have to do that anymore, type of thing. So this is now what we focus on instead of direction and control is risk and accountability. Okay. And that's through the draft guidance that they've given us. And that's on the next slide, we're looking at draft guidance. You can go on the internet and see CG-032. It's 50 pages of our guidance on that, which is helpful that you have something. It came out in November of 2022. Of course, there's reaction to it. It goes too far. It does too much. You're not supposed to be doing direction and control. It appears in areas to do it. So there's discussion back with CRA about, hey, you've got to adjust this, and probably there will be adjustments. And we're waiting for the next draft to come out. Here. So, okay. So we have these rules that do it. So, and that give us the CG-032 gives us help on that. Now, So practically, how is this done? Okay, what's the difference? So we were involved in a project to help put up a building for a very major hospital program. It's an international program, and the people there wanted a building, but we couldn't put up the building, so we had to, problem with a building, because if it's my charity and I'm putting up a building, then it belongs to me, right? That was always the issue. If I'm putting up a building and it's my charity, you're acting as an agent and putting it together and doing it. Contracted services. If you contract someone to put up a building next door, you're contracting them, but you own the building. So how was I to own the building in a foreign land? Okay, and there were mechanisms which you had to do to. Would I get title? I should have title. It's my building. That's sort of very difficult, and in some places you can't get title so easily. Hospitals sometimes it's typically on government-owned land, and the title of that building can't get to the donor. The CRA used to say, okay, if you're dealing in countries where title and things like that aren't like our Canadian system, we'll let you off the hook on that type of thing. There are some mechanisms trying to avoid this rule, but generally it was difficult to do buildings. Now, putting up a hospital building, that's a medical purpose, charitable purpose, just like putting up your hospital in your city in Montreal, Toronto, Vancouver, Calgary, Edmonton. You to make a donation there, great. Putting up a building, no problem. You can do the same thing with buildings internationally, or for that Canadian institution that's not a registered charity. If you're helping them build a community center, okay, great thing. So that's a very big part. And again, it's not your program. It's not my program, okay? It's the program of the institution. So I'm not trying to figure out what I'm doing here and papering, this is my program. I'm just giving the money, describing the actual program that you're doing. You're putting up a building, costs and everything else like that have to go into that. We'll see that. Yeah. To me, the biggest help here is that, and one in which there was always risks before, which we didn't necessarily account for. If I'm doing charity in a foreign land or in Canada to a non-registered charity, it's my charity. It's my responsibility. Okay. There were, it's like really, if they're building a building up there, there's responsibilities. Isn't it mine if it's my project? There were lawyers who used to tell their clients, foundation clients, say, don't get involved in this. There's risk involved here, not the risk of charity and all that kind of thing, but there may be risk involved in the project that you shouldn't get involved with, right? Foundations are the one that have the money. So if something happens, who do you sue? You sue the one that has money, right? So I like this, is that we're out of the picture of doing our own charity, which carries risks, and opens it up to say, we're making a grant. You take out the insurance. It's your project. We're a bystander. We're a donor, right? And we're a quiet donor. We're not telling you what to do and how to do it and all this kind of thing. Okay. So I think that's a real positive. Okay. So let's go on to some of the wording in the in those things. So one of the words that talked about is in furtherance of a charitable purpose of the charity. Now, that's difficult because yes, it has to be charitable. So a foundation does charity. Come on, we give money to the university. We give money to the hospital here in Canada. We give money to United Way. We do all these things. No issue there. but is it part of your purposes to, written down in your incorporation documents that says that's what we do? You don't have to have that. You don't have to say our purpose is to give money to United Way. It's fine. You don't have to have it. The Income Tax Act says you can give it to registered charities. United Way is a registered charity. Great. Thank you. Thank you for your gift. Here, though, it's saying it's got to be in furtherance of a charitable purpose of the charity, of you. So look at your incorporating documents and see what it says. What does it say? And these were done, decades ago and whenever it was done without much thought process of this, because how could you have done thought process of this, where it actually says to make a grant, a legal permissible grant to an institution, it should be in furtherance of a charitable purpose. So one would look at your documents and say, what does it say? And say, you know what, I've got to amend. I've got to go through the process of adding items to our purposes that could fit into our programs that we want to do. If it said before, a purpose of our foundation, one of the purposes is to support medical research and work and things like that, and you're doing a grant to a Rome hospital, you're fine. You're fine. But if it doesn't say that particularly, put in something that says medical, whatever. You don't have to say internationally or whatever. You could say in Canada or internationally in your purposes. That's great. But try to make changes to your documents and send them in to be approved and all that, which will increase the gamut of what your purposes are, so that when you are dealing with the excitement of doing a Canadian grant to an institution that's not a Canadian charity, and it's a great program and everything, it fits into your purposes. Okay. So that's a step that foundations should look at and see what they're doing. The government document, which is the 50 pages long, talks about something new. They talk about having accountability tools. Okay, so and this starts. Remember, in the legislation, it says you should document, the program and everything. This is really the major part of the documentation. Okay, it's just a new form of documentation. Okay, and what they're telling you to do is assess the risk of this project. Now, really, that's not in the legislation, assessing risk. What they're actually saying is, guys, you're going to give money to non-Canadian charities, whether in Canada or whatever. We have no ability to audit them. So how do we know what's happening? So we want you to sort of do the work of making sure that they're on board and on side and things like that. Now, that's not really right. It doesn't say that in the legislation. There's some words about making sure 100%, it's all there, but it's not our job to assess really the risk of these grants. But they're saying do it. Assess the risk. We're gonna look at this in detail in a few minutes. High, medium, and low. And they're basically saying is that, if it's low risk, you don't need that much documentation about the complexity of what you're doing and the detail and everything else like that. But the higher the risk factor, then you need more reports, more detail, more everything to justify the higher risk. Okay. And, it's not a risk as we're doing medical research in this hospital in Rome and we're trying to find a cure for diabetes or something. Will we find the cure? What's the risk of finding the cure or not? No, we failed. Oh, it's a huge risk. No, that's not it. It's about the program. Is it charitable? Are the funds being used? Not mainly, 100% for charitable purposes. Those are the risks. Will it be carried on properly? Could there be fraud? these type of things, and take our dollars and misuse them type of thing. These are the things that we're talking about for risk. The document talks about, the government got about setting reports out. So it's part of your documentation to make sure, well, what's happening? Give us reports. Tell us what's going on. Show us how you're using the money, okay? Particularly for your charitable purposes. The report should have a transfer schedule of how you do it. They say that the grantee, the recipient, should separately track the funds, okay? So that the funds being used should be separately tracked, really. Why, you make a grant to the university, the hospital in Toronto, you don't have to separately track funds. It's just as charitable. Here, they have to separately track funds, again, as an aid to saying, okay, if we want to look at this and see it, we want to be able to see it cleanly, easily, and readily. So, and in fact, your contract should say you separately track funds, and you should be able to provide the detail and documentation of those steps if CRA requires it, wants it. And of course, it talks about describing the project, why is it charitable, why it fits into your purposes. So we are going to now look at a document, okay, used by a charity, okay, to have this. No, back up to the slides. Back up to the slide that we were. Yeah, we're not quite there. Back up. It's internal documentation, the form. Okay, so here is a document. Okay, this is very different. This is an internal document. Okay, we're calling it grant accountability requirements. In this charity, you're saying it's grant number. You don't have to do this. 22.1, 22.2, 22.3. So you have, this is documentation. Today, we of course keep the documentation on the computer, right? That we have documentation we have about this grant. And the grantee says the name of this. We're going to actually look at a real one after we go through this a little bit. So you'll see it. Grantee, who are we doing this to? To Rome Hospital. Sorry to use Rome Hospital. I love Rome. So I've never visited a hospital in Rome, but maybe we'll do a grant there. So Rome Hospital, date of agreement, August 2023, due diligence review of the grantee. So this is documentation. You're writing down what is the legal structure, what is the description, key lay and staff people, our relationship and experience with grantee. Certainly, if you've done agency agreements with them before, and now you're switching to grants, which you should do, you're saying we have had a long relationship, we've done agency relationships with them, and everything has worked out, everything's good. That's a very positive thing to show less risk if you've worked with them. Everything's worked out. That's a very good thing. So then we'll go on to description of grant activity. Describe the project of the grant, the purposes, timeline, how to be carried out. Okay, so here it shows on this little form as 2 lines. Well, that could be 4 pages describing the project in detail and what you're doing, or it could be 1 paragraph, depending how you can do this. So really describing what's going on there. Why is this a charitable activity of the charity? Well, now we're coming back to our purposes. So why is the activity charitable under common law? And I sort of am a little anal about this one. We tend to say everything's charitable. No, this is charitable, this is charitable. And actually, under Canada's definition of charity in the Income Tax Act, there's no such thing. It's what's there under common law. Are under the courts have defined what it is. And when you actually see how what the courts have done, it gives you a description of what's there, but it's not always so clear about things that whether they're charitable or not. And so what I suggest is that when you do this, you sort of take into consideration the general language of what is considered charitable, so that when you write up your program, description of grant activity, that writing is colored, okay, to really reflect something that's charitable, okay? Because you have use of language, and sometimes you use language which can lead to different conclusions, and you say, hey, you know what? That can lead to this. Maybe there'll be a question of whether this is charitable or not. Why not? Let's rewrite it if it is charitable, so that the wording of the grant program and everything would be, it's very clear that it's charitable. Okay. We're not quite into the agency agreements of trying to do those, but really making sure that you're, that you're writing why this is a charitable activity, and that your description of grant activity follows in here. Okay. And how does this fit into charity's purposes? Well, does your incorporation documents, does your thing say this does fit into that? And, what's there? Again, a lot of this is CRA looking for control that we're not supposed to have direction and control. How do they know this is okay to do out there? They can't audit it, so they're hoping that you will do your work and documents and work to give them assurance that there's control. Okay, so we move on to this form. Again, this is whatever, and this is the question: how risky is this grant? So review risk from the point of view of the charity, sophistication of capability of the grantee, the stability of the location of the grant. So if you're doing this in no political jokes here, okay? If you're doing this in a hospital in New York, no jokes. Oh, we assume it's very stable. It's very whatever. If we're in doing this in a place that's doesn't have the same sophistication of controls, of government controls, and whatever, you can think of names. I'm not going to think of them out loud. You say, well, that's a little bit different. If the rule of the land is not government, is not these other things, then there's a much higher risk of things going wrong here and everything. And are we sophisticated to handle this? So here's the statement that's already filling in this question. The charity is a sophisticated Canadian public with much experience in working with grantees and has dedicated staff. That just goes into all of ours, right? And as such, so we're trying to put in things that work well here. Okay, so now the grantee is the Mount Sinai Hospital in New York is a registered charity in the state of New York. It undergoes government controls, and the grant occurs in the United States. The government has controls over charities and stables. In our opinion, this is a low risk grant. If you see CRA rules, just size of grant. If it's under a certain size, under 5,000, it's a low risk grant. If it's higher, it's a medium risk grant. Size of grant doesn't make it low or higher risk, but they're basically saying, look, the more money you put in, it's a higher risk because it's more money. So make sure you have more documents, more things, more reviews, more everything. In that case, the more money you put in, and the more unstable the issue. And there's got to be reports of set out, and we'll do that. Okay. So okay, moving along. So we're looking, I think you're looking here I'm not seeing this on my computer. We're looking here at an actual accountability forms, and okay, we're going to get to it. Okay, and we're going to make it a little bigger. Okay, so here's a real one. I've taken out the names and everything of the charity and who is going to and things like that, but just to give you. So we start by saying what the name of the grantee, the number, whatever, date of agreement, due diligence review of the grantee. So here it is. It just so it's an American institution. It is a 501c3 operating out of the name of the location, the city. Since it was founded by the name of a person, an iconic figure with an immense reputation in the area of service to the underprivileged. It has an active board of directors whose president, a name we have communicated with. Again, we're showing, we could list the board of directors in our documents. The fact that we spoke to the president, we spoke to the president. That's it's an accountability tool. We're getting confidence in it. We have received the financial statements, which indicates the relatively small organization, which accomplishes a lot with its money. So it's showing we have the financial statements. We can have that in records. It receives grants from various foundations. So we saw that. And there were a number of community foundations that received grants from. So we noted that. That shows more surety that there's a process here of reasonableness and not risk. And we communicated with one of the staff members of the community foundation. Again, this is in the United States. It's not, we didn't know the organization before, but in their town, there's a community foundation. We spoke to them and they vouched for them. Okay. We're putting that in here in the accountability. You do what you can to show, yes, this is real. This is positive. You've done your due diligence. Okay. They referred us to the Giving Partner site, the foundation, which does analysis of charities in the United States. So we referred to the site and it showed it. So Giving Partners is this analyst that takes in data from all charities, and they on their site it determines their risk analysis of that charity. It was very positive. We put that in, that we looked at it and we've seen it. This came about from a fund, and a family has a fund, and it did come about from a member of that family who's dealt with this charity, has seen it, has visited it, type of thing. So we put that in, and again, it shows that there's something happening here. It's real. That it shouldn't be risky. That we've done due diligence. Scrolling down here. Now, we got this from them, exactly what they do. All the things they do in terms of the programs that we're going to be supporting, with some details. So, okay, I don't care. Put it in our accountability document, and Women's and Girls, so it goes down, it goes through. It is an amazing place. And okay, so we have details there of what we're doing. Then we're saying what we're going to spend the money on. Okay, the detail of that. Our total grant is $300,000 in this case, payable over time type of thing. So they've given us a thing of how they expect to use it. Clearly, it's and we have pictures in the files. We have all kinds of things like that. Definitely a underprivileged group of clients of this agency, and clearly charitable, helping the underprivileged certainly is part of our purposes. This is clearly that there's nothing else they do except helping the underprivileged. It's clearly 100% charitable. Very good. Let's go on. Why is this a charitable activity? So, so we have our general statement that the basic Canadian test is from a court case, which is the relief of poverty, the advancement of education, the advancement of religion, and miscellaneous activities beneficial to the community. The project, working with the poor in various ways, is a beneficial activity of the community in the category of relief of poverty treatment. So we're making a statement. That's what it is. I'm not saying, oh, this is a fine line. Maybe it is. Should I look at the program? It's very clear what this is. One of the purposes of us is to make gifts, grants, contributed for the relief of poverty, and so that's in our purposes. And just saying we've made millions of dollars in the past of doing this, so we're doing this, and it furthers the charitable purpose. So, how risky is this grant? So, this is the grantee is a registered charity in the state of whatever and goes government audits. The grant occurs in the United States, and which has controls over these things. In our opinion, this is a medium risk grant only due to the fact that it's a large grant for the size of the institution. We do not have direct experience with. We shouldn't have that name there. So, we're just saying, yeah, reasonably, we don't have experience with them. It's not really a high risk grant. It's clearly what they're doing. They're set up. They have board of directors. They have audits. They have controls. They have all these things. It's all good. But it's a nice size grant for their activities. So we call it medium size. What are the monitoring reports? The grantee will provide monitoring interim reports every 6 months containing project progress and a review of how the money is being used for charitable purposes. Failure to provide interim reports will result in a cessation of further payments. A final report will be issued by the grant with evaluation of success. Now, in actual fact, one of the things that we've done is that in that document that the government sent out, it said you shouldn't send all your money up front because you're going to get reports. And what if they don't send you the reports if you send all the money? So you should have the leverage. Really, what they're saying is don't send them all the money. So we've took that in as a standard of our steps. Don't send them all the money, okay? Just to follow the guidelines. And even if we would have sent all the money, but it may be that we've said, okay, we're going to send you. In this case, we're sending at $75,000 a quarter, but. It's like, even if we were sending 150,000, we would have sent it all at once. We're saying we'll send 75,000 to you today. In 3 months, we'll send another $75,000 if we receive, the first report. So we've created that sort of obligation to continue to get money if you get the report done, and so reports are necessary. We'll talk about reports in a second. That's there, but so this institution actually received it $75,000. 3 months later, we received a report. We didn't bug them. A really good report that showed exactly what they did and how they spent the money and everything else like that. It's now we did this in January. We now received a report for. Up to June type of thing. So it's running along very, very well. Separately track funds. The agreement contains an approved budget and breakdown of spending over time for the grant. The grantee will segregate the spending and report how the actual spending relates to the charitable project budgets and purposes. That's in our contract that they have to do that. Is there a private benefit concern? Again, the government document says, is there a private benefit concern? We're writing, there is no concern. There is no private person, whatever, that'll be in all of our things, that type of thing like that. So that's just an example of a real process. We can go back to the last slide. And so what does that mean? That's our documentation with the reports. And we're documenting process, we're documenting concern, we're documenting work. And look at all that work. Well, you know what? So it's making phone calls, it's getting information. So we have one. We're dealing with a charity. Please send us your list of board of directors. Please send us this. So we have that. We have that in our files, and we're now keeping it all electronically. And in our computer system, we have things under grants, grant reviews, and grant programs. So it all goes in there, type of thing. And you have a process that works. The reports we'll provide reports and, just a little bit of question about reports. So sometimes, like, someone gives us a report and it's useless. It's not useless. It's just there's no humanity in it. Tell us really what happened. I mean, I want to know what happened. I want to know the people who got these services, the care for babies in the program, something like that. What happened? What was the reaction to it? Is it working? Okay. Every charity is going to be positive about what they do. I've never heard a charity say, yeah, your money is really poorly spent. But I want to hear that 37 people attended this program, that the result was was positive. I want to hear something that really showed what went on and whatever. And then particularly budget. So we ask, as you saw, particularly how you're spending the money. And then when they send us the reports, they're going to itemize according to our budget. In other words, they may spend $300,000, but our part is only $75,000 for the quarter. But show how our dollars in those categories, if they're buying baby supplies, because that's what was in the budget, I want to see baby supplies and how much they spent of our money on baby supplies. So I want to bring it down to the detail of our money to ensure that all of our money is being used for charitable purposes. And if I see that there is a really large expenditure, I'll say, please send me a copy of the bill. Again, you don't need to keep your books, the copies of the bills here, but I'll for large amounts, I'll say I want to have that on record, which just shows for large bills. Keep that in record type of thing, and as an ongoing process, another control, and another effect of showing that we're on top of things. Other things that we're putting into our electronic processing is other documents. So visits we have. So let's write that up, put that in our electronic file. Our accountability tools added to that. We visited on such and such a time. This is what we did. If we have a phone conversation with them talking about what's going on and everything like that, we document. Our staff will document. We spoke to such and such. We talked about this. We talked about that. Put that in. If we have, obviously, in doing this, we may have Zoom meetings, right? Where you're talking to people, document that we had a Zoom meeting. You might record a Zoom meeting and have that recording as part of your documents. Emails, lots of emails go back and forth about this, about getting things like that. Put that emails, collect that in your electronic records type of thing, so to show a record of what you're doing. So it's a fair amount of work. But it's a valuable process. We can get off the slides now. It's a valuable process. I'm very excited about this. It does require some conscientious work. Why not? It's okay to do it. I think it's got to be done. I think it opens up for Canadian charities to new things that we haven't been involved with, and would be amazing stuff to do in our own country. It really allows you to do international grants in a way that's not risky to yourself. That's straightforward. That does what you're doing well. We have tended to visit international places in our agency agreements and whatever, and type of thing as part of our due diligence. We'll try to continue to do that for major ones, but not necessary, not always. Zoom meetings are a much easier way to visit people these days. So I think it's a major step forward for our charitable landscape in Canada, And I really hope that those of you who are representing foundations and watching this get on this bandwagon. This legislation is already a year old. We can use it. There's uncertainties. It's okay. Do it with diligence. Do it conservatively. Have more documents on less type of thing. As if it's a higher risk, more risky. Doesn't make to do a little bit more work than you may is necessary. Okay, what difference does it make? And really do lots of great charity. So thank you for attending this, and good luck with this. Thank you.